kisses that once in a lifetime.
You say that don't like them, but I see you all the time. Peep shit. You say that don't like them, but I see you all the time. Peep shit. You say that don't like them, but I see you all the time. Peep shit. You say that don't like them, but I see you all the time. Peep shit. You say that don't like them, but I see you all the time. Peep shit. You say that don't like them, but I see you all the time. Peep shit. You say that don't like them, but I see you all the time. Peep shit. You say that don't like them, but I see you all the time. Peep shit. You say
Alright, welcome to the stream. Thank you for the 10 people here. If you have anything you want me to look out, make sure to type it in the chat and I will make sure to chart it for you for free. Just trying to help out people learn more about whatever asset you're looking at from a technical analysis standpoint. Wow, we're already at 10 viewers. I mean, it's my first stream. I know that's pretty much nothing, but I was a little bit anxious about it, not gonna lie. Here we got Bitcoin. It's at 12K. I posted it on my Twitter down here at 10.8, and it's just had a crazy run, kind of ascending triangle step up here for the pump today. But if you see back here on this green candle is pretty much where I think it was square about like $50 million worth of Bitcoin. So yeah, it's just been running up. I'm gonna come back to it in a second, but I want to start off with SPAC, Spartan Energy Acquisition Corporation, which is pretty much Fisker. It's Fisker's SPAC, which means that they're trying to raise capital for their IPO, which will be decided on October 28th in just a week. And recently the price of SPAC has been going down quite drastically, and a lot of traders have been getting quite mad. But today I was just scanning the charts and I noticed something like low-key insane. It's literally been in front of my eyes the whole time, and decided I might show it on live stream for my first ever stream. So let's get right to it. Here we go. So here it is. We got the falling wedge. If you do know what technical analysis is, you obviously know what this is. But if you don't, this is a very bullish pattern. Basically, you have a run up in price, and then as you start dropping down in price, you're pretty much contracting, which means like the volatility is going down, which will signal an increase of volatility. And the way to play these is basically after 5 touches, where you have 1, 2, 3, kind of 4, and then you have your 5th one right here, there's like a 60 to 70% chance that it's going to bounce up. Now when you're looking for a target for this type of pattern, you do a 50% retrace, which is basically Fibonacci. It's like a universal code that can also be used in trading. And if I'm going too fast, if you have any questions, let me know, please. I know this is all pretty out there, but this is a very good thing. And just to, dumb it down a little bit, what I'm pretty much expecting to happen is either we come up to test this supply line, and then we drop back down right around the merger vote time, which is the 28th. And then with the merger vote catalyst, it could help us break out of this. If we do break out of it, 50% retrace will come in time. I don't know how fast, but it will come at some point. And it's just a really bullish pattern. Also, this is again a little bit complex, but for people who do know what I'm talking about, we have a potential chance of getting classic bullish MACD divergence. What is up, Maddie? I don't know if that's how to pronounce it, but nice to see you over here. First ever stream, first ever chat actually, so thank you for the support. But yeah, on the MACD, which is basically the moving average oscillator, we have potential bullish divergence, which means as the price goes down, the moving average convergence divergence is making a higher low. It's very classic, and it cannot be confirmed. I kind of wrote unconfirmed. Can't be confirmed until you see, like, let me zoom in, some waning momentum, like the whitish red. But that is a possibility if we do come down to this level and catch bids. This is on the 4-hour time frame, Nicholas. So yeah, what I'm really hoping for is maybe we run up to test this supply line, then we drop back down right around the merger vote time, and you know what could happen then on the 28th. And then imagine we just break off right there, and then we could pretty much get a 50% retrace in time. Also, another thing to note, this is the first ever time the relative strength indicator, or the RSI, has been oversold on the 4-hour. First ever time. It is majorly oversold, which means new traders should be coming in at any point. I don't know if it's going to be tomorrow, I don't know if it's going to be by the end of the week or next week, but it is going to come back up to at least a neutral zone at some point, which means the price should go back up with it, as it's currently oversold. So now, for those of you who do not know what SPAC is, I just want to go over some fundamental stuff. So I actually wrote a little bit on my left, and as you can see, aside from the chart that I just showed you, which I'll go back to in a second, there is a lot of catalysts for this to occur. Basically what SPAC is, or Fisker, the company that it will merge into, is an electric vehicle company. The simplest way I can put it is that it's pretty much like a cheaper but more eco-friendly Tesla. And the catalysts for this are, first of all, Henrik Fisker has already worked with electric vehicles back in 2013. He made the Fisker Karma, so he knows a good background on electric vehicles. And he also recently put out, I think it was during an interview he had, that they already received 7,000 to 8,000 pre-orders, which is like in the millions of dollars for pre-order revenue if the people were to actually fully go through and buy those cars. Then you also have the Magna manufacturing deal. They're very well known in the automotive industry, and they will easily be able to produce all of the cars, so that will not be a worry. Moving on, Fisker, or Henrik Fisker, the owner of the company, will be on Mad Money soon. That's just kind of a weird one, but Jim Cramer, the host of Mad Money on CNBC, kind of talked bad about SPAC, but he eventually just invited Henrik Fisker on the show. And originally they said it would be this Friday, but then I've been hearing some stuff that Fisker said he was busy, so at some point that will come. And then again, we have the merger vote on the 28th, which pretty much means on that date, the shareholders, the institutions, and the company itself will vote on a day for the actual merger to occur. And then that'll lead into the merger, or IPO, which will gain a lot of attention from the general market. Moving on, just to talk about the car, get a little bit more specific. I don't know too much about cars, but it's just what I got off the website. It has a 250 to 300 electric mile range. It has a vegan and recyclable, I'm so bad at pronouncing words, man. Let's just move on, okay? Now, it also comes with a subscription plan, which is something I really do like about SPAC. Not a lot of cars are offering the subscription plan that they are going to do. It's just pretty much going to be able to get it to a lot of more people that are maybe a little bit skeptical about going into electrical vehicles. You can return the cars at literally any time. and there's no like deduction on that or anything. It's just you pay monthly, I think. So that's also a benefit, which could lead to more sales in 2022 when the car drops. Also, as a third row option for the car, family suitable, and you can put up to 30,000 yearly miles on it if you do the subscription plan. If you just buy the car straight up, then obviously it's yours. And then just I already mentioned Fisker had passed electric vehicle named the Fisker Karma, and then Apollo Management, the company that's handling the merger, is very well known in the financial industry. Can you discuss the amount of shares increasing after the merger? I'm going to be completely straightforward. I don't know how to answer that question. They do have, if you go to the SEC's website, you can look at all the forms that they file, like the DEFM 14A. I think that's the form you should be looking at, but they clearly have like a 30-page report on what will happen during the merger. So, I mean, I can pull that up, but it's going to take a while for me to read through it and find what you're asking. And there is a lockup period, Nicholas, that's correct. The SPACs that have a lower lockup period have been dumping, like HYLN, which was like the garbage truck electric vehicle, and also VLDR, which was like the like laser graphing one. And then just to put a disclaimer, I do own SPAC, and I have owned SPAC for a couple months now. Just want to make that clear while I'm showing all of this. I want to be straightforward. Should we expect an uptrend fairly soon? So let me go back to the chart real quick. Zoom in a little bit. Okay. So obviously this falling wedge is not 100% certain. Nothing I say here is 100% certain. But if you just look at how convenient this falling wedge is placed, first of all, it's almost confirmed. We have like 3 or 4 touches. We only need 5 for it to be a confirmed pattern. Then you put that alongside the potential classic bullish divergence. It basically means that at this level, we have so many catalysts. We have potential classic bullish divergence. We have the demand line of the falling wedge. We have the merger vote. And you see these 2 green lines down here? Those are horizontal supports looking left. The top green line was the support around the end of July, beginning of August. And the second one is a support resistance flip, or it could be a support resistance flip, which was like right before the massive pump. This was the resistance we were looking at in the beginning of July. So there's a lot of reasons for the price to bounce off. I'd say between the $11 to $12 range. That's really what I'm looking at. And here's the great thing about it. If it goes under the $11, that is like the lowest point to buy this trade. Guess what? That's literally $1 away from the redemption price. That pretty much means that since it's a SPAC, it's like a democratic way of launching a company. The people who are buying this, they can redeem their shares around $10. I don't know if it's a little bit higher, a little bit lower, but if we do get to this level at 1108, you're literally risking like no more than maybe 10 to 15% for a potential gain of infinity. So while in the short term, I do think we're going to continue this downtrend for maybe a few more days, and maybe even not. Whenever demand comes in, we'll start going up, and we're going to test that supply line of the falling wedge. But there's just so many different catalysts and a lot of signals on the chart that are signaling, to me at least, that the risk to reward here is crazy. Like if it comes down to the mid 11s, you're literally risking like 10 to 15% to gain, anywhere from 20 to hundreds of percents. And especially if you take this as a long-term trade, which personally I'm trading in different ways. I had a swing trade, which I had to lower my position as I got stopped out a little bit. And I also have some call options. And then I also have, and this is what I was talking about, the long-term trade. I have some SPAC in my Roth IRA. So when the merger happens, it's going to transfer over to money symbol FSR. That's going to be the new ticker. And I'm just going to be holding this because I really think with the way that Henrik already has a past in electric vehicles and just the amount of, unique things about, especially the Fisker Ocean and the other potential vehicles that they're going to be releasing, I do think this will be worth a lot more in 5 to 10 years. And by a lot more, I mean hundreds of percent more. So it's in my retirement account as well. So I'm basically trading it in every way. But at the same time, I'm managing my risk. I'm position sizing. I have stop losses, which is what I recommend to everybody because nothing is ever 100% certain. So that was just my quick rundown on SPAC. Yeah, man, I've not seen anybody talk about this falling wedge, and I didn't even notice it until today. The main reason I noticed it is because we did come. So basically, we came back down to like this demand line. but I was just testing out a demand line. If I just anchored this and this, and I saw we were literally right around it, and then I got the supply line, and boom, falling wedge. So yeah, whenever you're looking at a chart, you're not 100% sure, just start drawing trend lines on different swing lows and swing highs, and you might end up across something great like how I did. So I'm going to make sure to post this on Twitter. I just want to give the stream my first look at what I noticed on SPAC. And I do think, although we can go a little bit lower, the floor is right around $10, and you know the potential upside is like infinity. Let me just get a quick sip of water. And thank you for those of you who chatted. And thank you to, hold up, let me try and fix this. Lower that a little bit. To Cole's Gamash, I don't know how to pronounce it. Thank you for the subscription. If you guys want to see more live streams, I'm probably going to be doing this a few times a week to start off. But yeah, last time we saw 1180. The last time I don't know if that's what you're asking me, but the last time we did see 1180 was back in August, and it's right over this 1165 support that I have lined up. This is definitely a reversal area. I mean, if you look, so these two green lines, the bottom green line was the resistance before this insane rally from $10 all the way to 21. So that could be a huge support because that's what we had as resistance in the past. And then this upper one, 1165, was what we held as support before the run from 1165 all the way up to 1830. So these are two really solid support lines that are showing at the demand line of this falling wedge with potential MACD bullish divergence. And then one last thing that I didn't even mention yet, it's kind of a little bit hard to see, but this like weird curved blue line is the 200-day moving average. I saw somebody on Twitter post about this. Guess what's also at this demand line? The 200-day moving average. So you see the yellow line, which is the demand line, the green line, which is a horizontal support, and the 200-day moving average. There's just so many factors at this level. Now, although it can come to this level and then it can keep on like walking down this demand line, it's just like a low risk area, if I'm being honest. Of course, to each their own, and you have to take however much risk you want to take and not take as much as you want to take. But, you know, just overall in the macro, you know, just to get my final point across, you're risking about 10 to 15% for a gain of infinity. It's your choice if you want to take this trade. I just really like it, and again, it's not 100% certain, and you just have to be careful on where you enter, because, you know, let's say it runs up and then you enter, it could drop all the way back down, you could get emotional. But yeah, oh yeah, that's exactly what I was just talking about, Maddie. The last time we did see 1180 was when we went to 18, so that's 100% correct. So yeah, a lot of catalysts here. It could literally open tomorrow and fall under this demand line, so I'm just trying to really emphasize this is not certain. It's just a higher probability chart pattern. And again, if at some point we do break out, I'll be posting it on my Twitter, but the way to target a falling wedge is a 50% retrace, which is at about $15, a little bit under $15. So just to pull out the price range, let's say one entered at the 1165 support, played it till the 50% retrace, you'd be talking 28%. Now, if you entered there and you went to and it like literally crashed, the redemption shares would be right around $10. So you're risking 12% on this swing trade to gain around 30%. But in the long-term trade, you're risking 12% to gain who knows how much, with all the different factors on the chart. So hopefully this goes through my rundown. And Zaid, welcome to the chat. What do you think about the bears on Twitter saying it's going to 10 or even 7? Well, first thing, if it does go to 7, it doesn't really matter because the redemption shares are right around $10. So it can go to 7. Okay, post merger, of course it can go to 7. It can go to any price. I'm gonna be completely honest. I might get a little bit of hate for this, but a lot of people on Twitter are emotional, and by emotional, I mean super emotional. People try to hide it behind big egos. I really try to block out the noise and focus on my charts and the fundamentals. So of course it can go to 7. Nothing is ever certain, but there's just a lot of factors for it to bounce between, I'd say, over 10, which is the redemption price, to about $12. That's like the bounce zone, in my opinion, the $10 to $12 range, or even more precisely the 11 to 20. I'm just saying 10 because that's the redemption, but I'm not worried about this, quite frankly. But of course, man, it's a SPAC, and a lot of SPACs have been dumping, so I get that. And I hate how that just tarnishes the reputation. Also, at the same time, it's a new company. Hold up, let me just skip this part. That song. So it is a new company, and not all new companies, obviously, not all of them work out. But Fisker does have a past in this industry, and I believe that he will be able to turn profits within a couple of years. But yeah, that's my full breakdown on SPAC. I'm going to be bringing it up a lot more as I continue to live stream. I'm hoping to do about 3 days a week to start off, and then if it starts to take off, I'll be doing maybe even daily. So we're going to see how this plays out. A lot of catalysts, a lot of signs on the chart, and one thing I definitely think not a lot of people are talking about that they should be is the oscillators. Like, we're talking about already being oversold on the 4-hour for the first time, and then potential classic bullish divergence on the MACD. Like, we're talking about a falling wedge being oversold on the RSI, the classic bullish divergence MACD, the two different horizontal supports, the merger vote literally next week. There's a lot of catalysts that can drive the price up, but I am just a tiny bit worried about the fact that it is a SPAC, and of course the general market. Anything can happen. There's the elections, there's COVID, there's a stimulus that's literally, I think they're voting on it tomorrow. Like, I think like Nancy Pelosi or something has to approve it. I'm not too caught up with that, but the stimulus will obviously shake up the market in either direction, depending on what it is. And SPAC will not be won't be given any mercy if the market does crash. I'm not saying it will. I'm just saying if it does. So there is a bunch of risk. And just to get back to that question, like, I mean, you can always just put a stop loss, whatever you're comfortable risking. Or if you're just not comfortable taking on a trade, cash is always a position. Let me get back to the chat. After merger, if this goes down, can we redeem the shares at 10? I don't quote me on anything, but the redemption shares I think happen right around the merger, like where you're allowed to exercise that option to redeem your shares back at the $10 price, but I'm not sure exactly when. Again, if you go to the SEC website, you can look at all the forms and it goes through everything here. Let me I have it bookmarked. I'm gonna drop it in chat for you real quick. If you want to see all the details about the redemption and stuff, look at the link I just dropped in chat. Make sure to come back after you look at the link, please. Thank you for the 3 likes, guys. But that link will show you all the business merger information if you go through the different forms. It's just a lot of stuff for me to go over right now. Alright, let's go back to the chat. So Nicholas is saying you can't redeem shares at 10 if it's below that after the merger goes through and is approved by shareholders. So there should be your answer. Okay, what do you think of PIC? Well, you're in the right place because I will look at it for you. Pivotal Investment Corporation. Whoa. I don't know if this is the right PIC, but the volume is 100. What's this? Can you tell me like what this is? Like, was this like a SPAC or something? Because if a chart has this many gaps, like I don't even know if you can see it on stream. I personally don't trade it if it looks that illiquid. But obviously, at a certain point, the candles actually started appearing, which means maybe it was an IPO or a SPAC or something. Okay, it is a SPAC. Great. All right. So I'm assuming this is where you could start trading it. Electric vehicle SPAC. So I'm assuming this was either the merger date or where you could just start buying shares, which is when the volume started coming in. So let's run this down. I already found something great right off the rip. Potentially great. here we go. First of all, made a higher low on your MACD. Again, this is not confirmed yet. This red wick can, continually go down, but if at some point it does turn back to green, you're gonna have classic bullish divergence. It's kind of Class C. Actually, no, it is actually classic. You made a lower low on price, and you're currently at a higher low on the oscillator. You just need to start catching bids. The 200-day moving average just appeared on the chart, which is literally right under the current price. And this is it's not much of a structure. There's not too much to work with here. So whenever I don't have too much to work with, I just start drawing demand lines. Hey man, it broke out, so that's always a good thing. Trying to see the best way to size this up. I'm not going to call this a textbook falling wedge. There's just not enough touches. But you have two little wicks that maybe one could consider as support. And you have, this is the one thing I do like, the resistance or supply line is very clear. I'm sorry, I just need water again. Supply line's super clear, and you broke that. So if this were to be a classic falling wedge, the way to target this, let me pull out my fibs. You go from the lowest point of the falling wedge, run that up to the top of the falling wedge. 50% is around 12 bucks. Now, of course, going to put a big warning over this. I have no clue what this asset is, and if it is a SPAC, that whole entire industry does have quite a bit of risk right now. But just looking at the chart, this is what I could see potentially happening. Man, my voice is already going. Let me pull up to the 1 hour. Pretty much just the same thing. No divergence on the MACD on the 1 hour. And the daily, I mean, this is a new chart, so it's probably not going to be too much. Ooh, actually, on your MACD. Whoa. Okay, hold up. Yep, you have hidden bullish divergence on your MACD. It's another bullish sign. Let me just clear this line. Take it off the days. Alright, so hidden bullish divergence pretty much means you have a lower low on your oscillator with a higher low on price. As you can see, the price is already, the MACD is already waning, which means the negative momentum is going down. So yeah man, if this thing starts to catch bids, bounces off this 200-day support, with the breakout of the falling wedge, the 4-hour classic divergence, the daily hidden bullish divergence, which on both of those divergences are potential because they have not gone back to a green histogram island yet. But if they do turn back to a green histogram island, I'd be much more confident in this. But of course, I'd have to do my research on what it actually is. But I do like it from a charting standpoint. It's just not too much data, unfortunately. But for sure, I can, monitor it over time, see if the divergences actually develop, see if it actually regards that supply line and actually breaks out of it and bounces off the moving average. Even though it's a very new chart, there's more data than I often see with new charts on this. So if anybody has anything they would like me to look at, type in the chat and I got you. Until then, I'm just going to be running through different things, but I'll be looking at the chat if you want me to look out, whatever you do. First off, we got the S&P. I actually posted this inverse head and shoulders on my Twitter at, I think, like 3,400, and it ended up running up to like 3,550, like exactly. It did not hit the measured move of the pattern, but it had a pretty deep, common retrace. I mean, I do not like this song. Let's go back. So if we just take some Fibonacci out, you achieved an 88.6% retrace of the swing high, or swing low to swing high. And that's exactly where it reversed at the Fibonacci 88.6% retrace. Not the most conventional Fib retrace. A lot of people don't even know about it, but that's certainly where it reversed. another thing is you do have hidden bearish divergence on the daily, which does worry me a little bit. I mean, again, the stimulus thing is tomorrow, so that could definitely change things up. It's just so up in the air, man. I could see it going either way. We still have a gap to fill at 33.06. I'm not sure. Just really neutral. I could see it going either way. Back to Bitcoin. Broke out. I am on the daily. 4 hour, there's still no edge, man. 12,000 was your resistance, which you currently are at, but you really need to get above 12,100. Like, that's really the area I want this thing to go up, I guess, or break through. Let me just show you a little bit of that. Look how many times 12,000 was the resistance on Bitcoin. Go even further back. Kind of your resistance here. You never closed a daily candle above it. And I mean, I could go a lot more further back, but especially on the 4 hour. It's gonna take me forever to scroll there. Yeah, I just charted a bunch of horizontal lines because there is not much of a structure right here. I guess you could say rising wedge, maybe? Nah, it just would be too unconventional. Let's see. Oh, this is one, the Stock Watch 2. He actually talked about this in his last video. But this chart looks nice, man. Ascending triangle with hidden bullish divergence. Let me make that a little bit more clear. It's a solid chart, man. Very classic bullish continuation pattern. The measured move's like 28 bucks. But 24.90 could also be a resistance. SME chart. Oh, SRNE chart for sure. Got you. I actually did look at this a little bit back. The first thing or pretty much the only thing I charted was the 1066 resistance. I think I charted it like literally right here, and look where it reversed. It ran back up to retest the breakout to the downside and continued to dump. No 4 hour divergence. Let me see what a retrace it's at. You're right in the golden retrace. Structure wise, I'm not seeing too much except for the fact that you're at a golden retrace. You are oversold. The last time you oversold was September 3rd or September 4th. Let's see what happened there. Yeah, you ended up just falling down a little bit more. Then you had a massive rally up the last time it was oversold. I just don't see any macro pattern. Major support at 590, but that's obviously super far away. If you break that, I'd be really scared to even look at this. Yeah, oh my gosh, bro. Uses as support twice and used as resistance once around January. In terms of support, I just don't see a lot of support until then, man. You actually kind of have one right here, like this 734 area, which is also at your 78.6% deep retrace. So maybe if you could get like classic bullish divergence by then, it would look a lot better. On the daily, you kind of have bullish convergence, and then the 1 hour, no divergence there. But yeah, I'm gonna be completely straightforward. It's not the prettiest chart right now. There's just not a lot of support. Like 734 is a okay support. It's not the best one ever. And you just filled a gap too, which is, I guess, an okay thing. But in terms of support, not too much until about 750, I guess. One thing you do have, if you start to run up at some point, you have a gap to about 1149. So that could be a target if it does make like a nice structure and show stuff on the oscillators. But yeah, just not too much I can work with that I see, especially from like a structure standpoint. It's kind of like a rounding top too, which I really don't like. If you look at it like that, if you ever see like a rounding action, like a rounding top or a rounding bottom, it usually signals price continuation to whatever the end side of that looks like. So if it's round, you could expect it to go there until it hits the support, or shows you know, maybe a decent sized retrace on the Fibonacci scale, or help from the oscillators. And then vice versa, if you saw like a rounding bottom, that would be extremely bullish. I'm just gonna go to another stock that a lot of people care about. Personally, I've never even traded this stock. I missed out on it, and I just want to wait till it's at a value area. But Tesla is not looking horrible. Pretty classic ascending triangle, bullish continuation pattern. It's currently at a 50% retrace if you go from the high at about the beginning of September to the low of September 8th, when the market was definitely taking a big drop. You had a 50% retrace, which means you've gone halfway back up, which or you come halfway down from that level. But the ascending triangle does look nice. Just not too much on the oscillators on the 4 hour. Nothing on the daily. 1 hour looks okay. Not great though. And let's move on to something else. Rocket, man. Dude, I see Rocket Mortgage in every single commercial. It was kind of in like this triangle, more of like a pennant, I guess, I'm not sure, but broke out of that. I sold it. Personally, I sold it literally like right when it broke out of this. So that's just to help you guys realize what having a stop loss or getting out when something confirms a breakout to the downside could do for you, because sold at like 2140 or something, 2130, and it's down to 2056. And in terms of support, you could probably line it up like this. Yeah, it looks like it could go down right to like 20 bucks before reversing maybe. So that's Rocket. Oh my gosh. So I actually day traded this Fastly. It had the craziest thump ever. And the one candle out of all of this nightmare that I traded it on was this candle right here. It was like literally like a 45-minute day trade. I'm not sure why I even day traded. Oh yeah. So you were showing you were just showing like kind of like a really low time frame double bottom. The only time I do use the low time frame for is for day trading. But you had that first drop and then you dropped again to the same level. And then I saw that it was starting to run up here as the 30-minute MACD was turning to positive. So I just saw like a little buying signal and ended up selling like literally at the top. That was a pretty decent day trade for me. Got you, Elite, man. Make sure to subscribe. I'm gonna be going live more and you can ask me whatever you want, whenever you want. I just love charting. Let me see what else I got. DraftKings, the Head and Shoulders, man. It's kind of playing out. So DraftKings, I bought it for a day trade again. I bought it like 48 bucks, and then it wasn't necessarily a day trade, it took a little bit longer, but then I sold it for almost 10% profit at 52, and that was when you started to make this rounding top action. I'll be more clear on the 1 hour. I was just talking about the rounding top, but I don't like when I see that on a chart. It's like a super simple thing, but I just don't like it. Then I noticed you also had a left shoulder, and on a head and shoulder pattern, if your right shoulder is lower than your left shoulder, it's actually even more bearish, because that means your attempted rally was even lower than your last rally. So I posted the head and shoulders, and I posted the measured move of it. Do I think we'll get to the measured move? Maybe not. The measured move, it could be a place to enter. I'm on the drawing thing. Alright. Yeah, $32 is the measured move of this pattern, which means you go from like the peak of it to the neckline or the support line of the pattern, and then you place that on the breakout level, which I guess should be like maybe like right here. But that lines up with 32 bucks, and I'm not saying this is going to go to $32. It could literally reverse at any point. That's just what a textbook pattern would do, and it's, you know, not the most common thing to have something play out exactly like a textbook would show it to. But I'm certainly glad I got out of this quick, because I'd be down like 20% if I was still in it. Michael Ortega. Whenever the stream finishes, I did like a 25-minute rundown on SPAC. Like I went over the fundamentals, the technicals, like literally everything. But I'll go back to it real quick, just summarize it. I noticed this pattern today. It's a falling wedge, almost confirmed. You have potential MACD classic bullish divergence if it starts to catch bids, and the reason I think it could catch bids at this level is you have two horizontal supports at 1165 and 1108, and then you also have your 200-day moving average. So I think either it's gonna come down to like 1150ish or 1165 and then bounce there, or I think we're gonna walk down this downsloping demand line until about the merger vote day, and then hopefully the bullish divergence can be confirmed by then. And the bullish divergence pretty much just means you made a higher low on the oscillator while you made a lower low on price. And then I also just went over some catalysts. Whoa, my voice. I went over some catalysts real quick. If you want to take a screenshot of that, go for it. And yep, so that's pretty much how I'm looking at SPAC. Falling wedge with a good amount of support. Redemption price is around $10, and the upside is who knows how high. Of course it could fail, anything can fail, but I'm pretty confident in this trade. Of course, I mean, it could also come all the way down to like literally the end of the pattern and still be a good pattern. So you have to be really strategic on when to enter if you are entering. And then you're also oversold on the RSI 4-hour chart for the first time in history. And the only thing I could say is certain on this chart is you're not going to be oversold forever. At some point bids will come in and you're going to go back to at least the lower neutral territory, and the price should move up with that. That's like what I'm looking at. Bitcoin just still right around 12K. Just can't really break it. Like it's over it, but it can't really get over this resistance, which has failed to break so many times, man. Like 3 different times in this year alone. Really want to see it break that level. Let me see what else I can look at. Oh, another thing I posted. I saw this at like, I think I posted it at literally like 27:01, and obviously earnings helped it out, but 22% after hours. The way I size this up is I put like $27 as like the entry, and then I pretty much used $29.45 as the first target, just for like a little swing trade, because that was your previous all-time, oh, I just had it, that was your previous all-time high, $29.45. So that was my first target on this. But then I also used Fibonacci to find the 2.618 fib extension, which is a very rare extension to hit, but I did think that if it had good earnings it could hit that. And I think after hours it got like right around 36 bucks and then pulled back some. But obviously I can't really chart one green candle, so this would probably not be the swing trader's time to get into this trade. Just not a lot of variables. It already broke out. It exceeded the first target crazy and almost reached the second target. Kind of did reach the second target, I guess. But of course, tech has gone crazy this year and it can keep going. But, you know, I'm just going to wait until the chart shows me more of a structure and some help on the oscillators. But, I mean, even if it's at a higher price and you see a good structure like an ascending triangle, and then you see bullish divergence, then I'd be more confident than buying a straight line up. You just don't do that if you're a textbook swing trader. And then you also had hidden bullish divergence while you're making that upsloping channel. So I just saw a lot of factors, posted it at 27, and within a week it went to 35. So good stuff there. Oh, Piton, another one. It's kind of like a parabola, man. I posted this at 81 with the sell target of like 96. Let's just say it really did pass that sell target. Definitely wish I held on to Piton. And now it's just kind of going parabolic. One thing I did note was it also hit the 2618. So if we go back to Snapchat real quick, which is right here. We have not hit the 2618 fib extension yet, but we kind of did after hours. It's not really showing it. We hit like 35.60 or something, which is like less than $1 away from it. But yeah, when things pump like crazy, that's pretty much all you can do if there's nothing looking left. Like if it's at an all-time high, other than like psychological resistances, the only thing I really try to use is Fibonacci extensions, because as you see on Piton, once you hit that 2618 at 135, you went a little higher, of course, but you went from like 138 all the way down to 125, and then 125 was the bottom of this big bullish engulfing candle. So I'm just trying to help people realize that there's just so many factors to help you trade, rather than just simply clicking a buy and sell button. Like all of these factors on the charts can give you potential places to buy and sell with a better probability. Yeah, the daily is just literally parabolic. I don't know what to say about Piton. I'm just gonna wait until it shows more variables, like how I saw back when it was $81. Unfortunately, I deleted it off my chart, but it was like a double bottom. You had hidden bullish divergence, which means let me bring this up. Hold up. Which means as you were making higher highs on prices, you made a lower low on the oscillator, and then it went back to green with the double bottom. And yeah, I mean, it ran up, hit my first target, like literally hit my first target, then it reversed back down, and I was already out of the trade, didn't really look at it. And then since then it just went absolutely insane. But yeah, man, crazy stuff for that. How long have we been live for? I have no clue. I think like 45 minutes now. See if I can do one last thing before I hop off. If anybody has anything they want me to look at, just type in the chat and I got you. I was gonna say kind of hidden or bearish divergence, but it's more of convergence, which means the oscillator is showing the same thing as the price. American Airlines, bottom of a range, but the airline industry is super risky right now with the fundamentals. BLDR, man, this is the thing that worries me about SPACs, man. This thing had such a good run up before the merger, and it's down like crazy, man. It's down 55%. And it was even showing an ascending triangle with classic bullish divergence, and it still dropped out of that. Like, every time it has a chance, it just dumps again, which fundamentally is not great. So I have not touched it since. I was playing the ascending triangle with like a small position, but then again, when I saw it break out of the structure, it was more on the 1 hour. Yeah. So I bought it like around here. It went up and then it broke out of the structure, and I got out. And then again, a reason why you should be using charts is when it broke the structure's demand line. Look how much it's gone down since. Down like 20% since it broke the demand line. And if I did no technical analysis, I may have still been holding this. So if you want to learn, I have a free course up on my channel. Just go check that out. Literally from beginner to advanced, every single thing is there. Make sure to check that out. Make sure to follow me on Twitter. Subscribe to the channel. And hopefully we can do more of these soon. Thank you everybody for showing up. We had like 20 viewers at one point. Chat was going pretty decently. And pretty happy with how the first one came out. So thank you for showing up. And I'll see you later.